We're also keeping an eye on the Fed this morning, too. We're hearing from Fed officials this week, more from them this week, including Atlanta Fed President Raphael Bostic. Bostic said that he wants benchmark rates between 4 and 4.5% by December, then pause hikes. Now, he said ideally the Fed should hold that level and see how the economy and prices react. However, Bostic went on to say he does not expect the Fed to start cutting rates in 2023, echoing Mary Daly's comments earlier this week. But this, perhaps, as Bostic had said, one of the glimmers of hope in recent data. And as we're continuing to think about what actual policy pathway the Fed would continue to move forward with in 2023, it's not directly a pivot in the form of cuts, but it is perhaps a pivot in the form maybe of a pause, at least.
Yeah, I'm starting to wonder at this point if we're going to get that pivot, and does it come later next year? I'm looking at a good note by Dennis DeButcher. I'm always citing his work. Why? Because it's just really darn good. And he's noting here pretty much flat out that it is unlikely we'll see a rate cut in 2023 at all, echoing what Bostic and Daly said. And that's a problem. If you've been sending this market higher this week, as we've seen in the first 2 days to start off this trading session or this quarter, look, I mean, there's no cuts coming. There's no cuts. So why are you bullish?
But the market is still pricing in a cut. The market does not believe that as of yet. I do think that we're going to stop talking about a pivot pretty soon, and the language will change to a pause. And I really like George Goncalves, who's a longtime bond strategist, was quoted in the FT, and he tweeted about this morning as likening what the Fed is doing to boiling a lobster, right? You turn the temperature up slowly, slowly, slowly. You don't turn it on a boil all at once, but it takes a little while to cook the lobster, right? Before you know the lobster's cooked. And that's kind of what Bostic was kind of indicating as well. We turn up the heat slowly, slowly, and then you have to wait and see if the lobster is cooked, so to speak. Unfortunately, in this case, the lobster is us, and the economy might be cooked. But nonetheless, it infers this time that all of this is going to take.
Right. You're definitely not ratcheting it back down to keep the lobster from being cooked.
And we're getting more Fed speak today, by the way, as well. It's not just Bostic from yesterday. We're going to hear from Kashkari, from Loretta Mester later today as well, Charles Evans. So the drumbeat
more
continues.
Hawkish tone at a time that oil prices are headed higher. How is that bullish? Not bullish. I think I'm just trying to question what we saw to kick off the week. The S&P 500 at one point was almost 6% in 2 days. None of that, it's hard to justify given what we continue to see in these markets from Fed officials, and now oil is another wild card that I think the bulls did not price in to kick off this week.
But I think especially with as much of the price contraction that we had seen and the broader kind of continued dip or slippage, if you will, in equity prices, there is still so much of the possibility of investors coming in, looking at some of the valuations, looking at attractive stocks that they previously didn't like at high prices, and saying, you know what, why not place an options bet? And we did see a major options play come into the tape yesterday and even on Monday as well, Monday, Tuesday to really kick off October. And so it really did seem like there was some nibbling that started to take place, even if it was for a much longer time horizon out from now.